Welcome to Alpha Wolf Trading. Did you know that there's over 12,000 stocks or companies that trade on the OTC? Between the NASDAQ and the New York Stock Exchange, you have over 7,000 companies. But us as retail investors, we wouldn't know that unless we were researching. Because why? Wall Street focuses on the elite, the big companies. And where the retail investor has their advantage is in small and micro-cap stocks. Why? Because you have the opportunity to speak directly with leadership. That is what this is all about here at Alpha Wolf Trading. We're trying to find the hidden gems, and we interview the executive teams of companies that we think meet the parameters to be those hidden gems. I also want to make sure you understand that this is not a paid-for promotion. I collect no compensation for the interviews I do here. These companies that I interview have been identified as potential opportunities for me and the members of Alpha Wolf Trading to receive a higher than average return on our investment. These companies I have identified either because of a technical setup on a chart, a fundamental change within the organization, new management team, new products, all kinds of different things that actually lead me here. But what do I think is the most important? Leadership. And that is why I do these interviews. I want to understand what drives the person that is leading the charge. I want to feel their passion. I want to understand their vision and the strategy that they're going to use to achieve success. That is what these interviews are for. I want to understand the share structure and the cap table, the size of the TAM, the total addressable market. This is the opportunity to learn all of those things. So sit back and enjoy. And if you learn anything from today's interview, do us a favor. Subscribe to the Alpha Wolf Trading YouTube channel. Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview, exclusive here, and a new company, and one that I find pretty compelling. And regardless of whether or not we go into a recession, in my mind, this one happens to have a component where I think maybe it's recession proof, and we'll get into that in a little bit. But Wishpond Technologies LTD. And the ticker symbol is WPNDF, as in Frank. And I've got Ali
Tajskandar.
There we go.
No problem.
The CEO has come in and to tell us his story. And Ali, I want to thank you for coming in.
My pleasure. Thank you very much, Tim, for having me.
You bet. So why don't you do me a favor before we get into what Wishpond does? Why don't you give me a little bit of background on you and how you got here?
Sure. Background on myself is that I started programming and getting into computer science since I was very young. So when I was 10 or so, I started programming. By 11, I was already commercializing. So meaning that, I built and sold my first software when I was 11 to a classmate in a school. He said his dad has a manufacturing plant, and I wrote an inventory management software for him. And I think he forgot about it. And then at the end of it, I said, well, okay, here it is. It's ready. Pay me. Like, oh, what the hell are you talking about? Like, oh, we had a deal. So he obviously didn't have the money because he did it for his dad, and his dad had no idea. And he said, okay, fine, I'll give you my CD-ROM. And back then, that was a big deal. Right now, people don't even know what a CD-ROM is. And but that's how I started. I was really taken by computers and technology, and as a kid being able to control it and make it do things that I find fascinating in the adult world. And then I continued with that, was involved with, different companies, startups, did my educational degree in computer science here in Vancouver, was involved with a few other startups, then at some point I said, you know what, my background technically is quite strong, but I didn't feel my background in business is strong. So I went and did my MBA at the University of British Columbia here again in Vancouver. And I always knew that I wanted to start my own business, that I knew. And that was something that was quite encouraged in my family. My dad also had a construction business, built, hospitals and, large contracts like that. And then I knew I wanted to start my own business, but one of the companies that I was involved with, one of the tech startups, the founder and CEO there liked me, and I was always there. I was there basically from the beginning of the day until like nighttime, and he was quite interested in me and how hardworking I was. And he said, you know what, when you want to eventually start your own business, come to me first for investment. And years later, when I was ready, I did go to him and I said, hey, I have this idea. I want to start my own business. Will you invest? And he said no 6 times, 6 different ideas actually. And then, or 5 times. The sixth time was idea of Wishpond. And he said, all right, fine. I think I wore him down more than anything else, to be honest with you. And he invested in the company and we started the business back in 2009. And the rest of it has been the story of Wishpond that I'll share in a minute as well.
Okay, so that became Wishpond.
That became Wishpond.
So Wishpond, how did we come up with Wishpond? How did we come up with that name?
Oh man, so Wishpond, high level of it is a platform built for small businesses to help them grow online. So it is to help any business be able to acquire customers, and I'll tell you a little bit more about that. But it wasn't always the same incarnation that it is right now. When we started, it was specifically focused on local retailers and helping them transition to being online and find customers online. So we would actually let you look for products from nearby retailers. It was always fascinating to me that you can find products and buy them from across the globe, but you have no idea what the store 2 blocks away from you has in the stock to be able to go and get it and see it and all of those things. And so it was product search for local businesses. And one of the concepts that was quite fascinating to me that we implemented there was, well, what if I find a pair of sunglasses that are, for $300, $400, and I want to say all I'm willing to pay for it is $250, and that would become my lead, my wish, that would be distributed to all other local stores, and they would be able to come back and say, I take it or not, or here's another product that I would be able to offer to you. So it was those wishes, that reverse auction component, that was where the name came from, Pond of Wishes, Wishpond. But later we pivoted away from local and making these lead, wishes and all of that, and became, bigger than that and more expansive than that. But the name was something that continued to stay with us.
Okay. All right. So let's break down what exactly it is that Wishpond does or provides. I mean, you already kind of gave us the hint that it's to help small businesses grow, right?
Yeah.
Become noticed.
Right.
And I'll just share with everybody that I went through the sales presentation or the demo, I guess, for my own Alpha Wolf trading, because I do absolutely no marketing. So, and I was extremely impressed with what it is that you provide. And it's basically the foundation, a really solid foundation to work from with your marketing, email campaigns, your I mean, just capturing people before they leave your cart, all of that stuff, right? So you build the foundation. And I guess the one name that I kind of want to compare you guys to is ClickFunnels, right?
Yep.
Which there's probably a lot of people out there that knew.
HubSpot as well.
What is it?
HubSpot as well.
Oh, okay. HubSpot.
Yep.
Okay. So I guess that's who I would. The difference is, as I understand it, you build out that ground floor for the customer, right? You build out that foundation, whereas I know through ClickFunnels you're given a bunch of templates for you to build out that foundation yourself, right?
Yeah, and that's a big part of it. And our platform is a lot more comprehensive than ClickFunnels. But let me give you a little background so that our listeners kind of know what we're talking about here. So
Okay.
so the primary pain point that we see in the market is that when you think about large businesses, internet is serving them really well, right? These larger businesses have armies of marketers and designers and developers, and they have ad budget and they have financial resources and the know-how and the special, specific specialized people focused on each of the areas of marketing. And they can also go out and hire agencies and pay them what the agencies demand, and they are getting the benefit of the online presence, and they're getting the benefit of having sophisticated marketing that works well. When you think about your average small business, agencies are primarily not built for them. They're built for mid-level of the market and up. They want to charge $5,000 to $10,000 a month. Your typical small business is not going to be able to pay that, and then add budget on top of that. Or they would have to go and sign up for a variety of different marketing tools. And 99% of those marketing tools are point solutions. So there's one that is just email marketing. One is just building, SMS campaigns. One is for referral marketing and so forth. As a small business owner, you're busy, you're running a business, and that's not your core area of expertise. Like, it's not going to make sense for you to sign up to those, pay the subscription fees. You don't even have a developer to try to gel them together. So it won't work for you. And now what is interesting is that there are millions of small businesses in the world that are basically being left behind. They're not interesting to your typical marketing technology platform, the silo players that I was talking about. They're not interesting to the marketing agencies. And they are currently losing in that competition for getting attention of the consumers online to the large companies. But this is not a trend that is going to continue like that. Small business need to also catch up, and they need the necessary tools and services and all of those things to be able to do that. And this is a huge trend, huge opportunity that is going to happen. And I'm very excited that we're at the forefront of a lot of that. And the way we do that is, listen, at the end of the day, when you talk to a small business and they say, well, I want to grow my business and I want to get more customers. Let's say they're a gym. This local fitness center wants to grow their business. And they've talked to a lot of people. Someone has told them, oh, you should do SEO. They do SEO and it might or might not work for them. And someone else says, no, SEO is long-term play. You should do some email marketing. They do some of that. They don't get anything. Oh, no, you should advertise in Facebook. You should advertise here. You should, do referral marketing, all of those things. And the problem is that they do one part, then they do another part, and all of them are expensive, where in reality, there's no silver bullet with success with online marketing and, getting online sales. There's only 1,000 lead bullets. So you need a cohesive system that works well together. You need something that feeds into each other. So the framework that we have is kind of like a flywheel effect, that you need to first attract new customers or leads. And we have the tools. We have your website builder. We have pop-ups, lead capture forms, those kind of things to capture and bring new leads. Once you've brought them, they're not necessarily ready to become your customer. So we have nurture tools. So email marketing, SMS marketing, shopping cart abandonment, all of those things. And once you've nurtured them, then referral marketing to bring more of the happy customers that are there with you recommending and bringing other people in. And that is a system that when you set it up the right way for a small business, they will be primed for success, and they can have that success. And going back to what you were commenting about, a lot of times the difficulty is getting it off the ground. So there could be a lot of things going on here, as I described. So what we do for our clients is, as part of the onboarding, we'll set it all up. We use our designers, our copywriters, everything. So let's go back to the example of that gym. When they come to us, maybe they have a simple website and not a lot happens with it, and maybe they just have a contact us form. That's it. With us, we say, listen, we'll actually rebuild your website as part of Wishpond, and we have our own website builder. It's amazing, drag and drop, works really well. Okay, now that you have that, we also set up so that when someone wants to contact you, it is using our contact form. All of those leads are entered into a drip campaign so that you can send them automatic educational and promotional and sales emails to warm them up. If someone is, let's say, on a checkout page to get a new membership and they're about to leave, then there's a pop-up coming up or a text message sent to them to bring them back to complete that purchase. That's again using Wishpond platform. You have members who want to sign up, and then maybe you can give them an incentive to say, hey, if you refer and bring someone else in, you get 1 month free, and the person you're referring will get 1 month free as well. That referral marketing is part of Wishpond. So all of that, we set it up for them and then hand it off to them, and they can run it passively or actively if they want, but they will be primed for success.
All right. So the beautiful part about this too is it's very inexpensive to get that
very cost
first
effective
portion set up, right?
Yeah, the setup typically is about $1,000, and as I mentioned, it even includes rebuilding your website. Just building your website is like $4,000, $5,000, $6,000. We throw that in because we want to just set you up so that you're with us for years to come. And in addition to the website, now we're doing referral campaigns and SMS and email templates, everything, the whole system, the whole machinery that these large multi-billion-dollar companies have, we're setting up for you and pass it on to you. And then after that, typically it's only about like $200 to $300 a month.
Okay, so I want to go back for a second. I want to ask you,
Sure.
and I asked you this once before, but how did your business perform when COVID struck?
Oh, very good question. So when COVID started, we were all very freaked out, as everyone was. A lot of it because we didn't know how this is going to affect things, and everyone went to a state of freeze, right? Like everyone's like, don't move, we don't know what's going to happen. And we started thinking, listen, what happens if half of our business goes away? And what was very interesting was that very quickly we realized, listen, we had a lot of customers that were in travel, hospitality, spas, businesses that were very hard hit by COVID. And some of those customers we lost or at least got delayed for a few months. But because we had thousands of businesses that we serve and a diverse industry base that we serve, we also had e-commerce and B2B businesses that weren't hit, and some of them were actually beneficiaries of COVID. And we said, okay, all right, we'll shift our weight to those businesses and focus more on, let's say, e-commerce type of businesses. And even though we took a little bit of hit there, we more than made up for it on the other side. And the whole year 2020 became one of our best years in terms of growth. And did really well as a result of that, which I think has great parallels to coming into 2023 and worries about recession, because a few things happen during a recession. One is that not all businesses are hit the same way, and the fact that we have more than 4,000 businesses that are different industries, it allows us to have that freedom to say, all right, we can move around and we are not going to be hit, and we can kind of make sure we come on the other side quite solid. It's a large number of customers, which means that we're not going to be at the mercy of one or two large contracts that if you lose them, it becomes a big deal. But also, going back to the price point that we just talked about, Wishpond is the solution to a lot of businesses who want to save money. right? When they are like, oh, I still need to grow my business. I still need to get new customers. I still need to do all of these things, actually, maybe more than before, to make up for some of the headwinds that I'm getting. But I don't want to pay, an arm and a leg to a marketing agency or multiple of these software subscriptions. I have no idea what to do with them. So Wishpond is that low cost alternative that is even more complete than what you were doing before. And those are some of the elements that really help us, and it also helps that we're a profitable business. So whether a lot of businesses this year I think are going to be in trouble, and last year for sure they were, because capital markets are completely frozen or almost completely frozen, so you can't raise money. We are fortunate enough not to need to raise money. We're okay. We're growing 30 to 40% year over year organically, more than that with some of the acquisitions we
So
made.
Ali, you're profitable?
We are, yeah.
Well, that's
Yes, we are. Yes.
so how many shares do you have outstanding, fully diluted?
Fully diluted would be, I think, about 57 million.
Okay, so anything under 100 million, anybody that follows me for any period of time knows that I think that's a small amount of shares outstanding, right?
Mm-hmm.
And you're cash flow positive, you're profitable. You sent out a letter, I think, at the beginning of 2022,
Right.
to your shareholders and your stakeholders, laying
Right.
out the plan. And what is one of the key elements for you that is really important?
I'm about to write my CEO letter for this year. Well, actually, I have most of the bullet points, and the one from last year is making me nervous because I got a few things really right, and this year I'm like, oh man, I don't know if I can top that. But one of the things that was interesting was that back then, around January of last year, it wasn't super clear how the year would turn out to be. But fortunately, I could see enough of the warning signs about inflation is going to be a problem. Supply chain is going to be a problem. There are a lot of macro issues coming up, and the year 2022 could be a challenging year. And the prudent thing for us to do, as I outlined in that letter, was to make sure we don't put ourselves in a vulnerable position. Vulnerable position would be losing a ton of money, and we would have to go raise money. And in an environment like that, low valuations, and investors can expect a lot, and you might not be able to do that. A lot of businesses are in trouble because of that. And we said we need to make sure we grow aggressively but profitably, and we did that. The first 2 quarters of 2022, we were still losing some money, and then by the end of Q2, we really closed that gap. We did a lot of cost cutting. We didn't do layoffs, but a lot of cleanups, a lot of optimizations, getting rid of waste and all that. Saved about $1 million annualized, and got ourselves back to profitable levels, and holding our cash position strong. So that was one of the elements that I think in that letter was quite important, and I'm glad we saw it like that. And we made, over the past 2 years, we made 5 acquisitions. All 5 acquisitions were profitable businesses with 15 to 20% EBITDA margins and all that. So we've always wanted to make sure that we run a profitable business, and grow aggressively but responsibly.
So that's, when I read a letter like that, it's one thing to talk it, it's another thing to walk it, right? So I guess the benefit that I had was I got to read the letter going back in time, and we were in real time, and you did what you said you were going to do, right? Mm-hmm. So that's when I evaluate companies, it's a matter, it's more than the product or service, it's the leadership, and it's whether it's the vision
as a jockey
they have, it's the strategy that they plan to implement, and then the big one is, do they execute, right? So far you've checked off all the boxes, right? So, and then going back to the COVID question, and that's why I did say that I believe that this is almost a recession proof type business. And the reason for that is, regardless of, hold on one second here. All right. Regardless of what happens with the economy, I mean, if somebody gets laid off, they still have to feed the kids or the
Right.
dogs, and they're gonna do something, right? So
Yep.
maybe they don't find a job, but maybe they decide to start an online business, right? So that actually creates more customers for you, right?
That's how Shopify actually grew quite a bit in the during COVID for sure, but even the previous recession a few years ago, that's where they got their start. You're right. A lot of new startups come as a result of people losing their jobs or recession or those kind of things.
Right. And I think the internet, I mean, it's going to continue to provide that opportunity. And, you know, I don't think that there's a whole lot of, I mean, there are companies out there that do what you do. I don't think that they do what you do as inviting of an entry level, as comprehensive as what you provide.
No, for sure.
Right. So I mean, we can go into, so that isn't where, so if you were just to do that, it's $1,000 roughly, and then it's $300 a month to maintain and be able to keep all that stuff. But then there's also a whole menu of items that you have, anywhere from, you know, video to editing to articles, right?
Basically, the way we've thought about it is that, listen, we'll build everything, pass it on to you. You can let it run, and passively, you will still be better off than before. The traffic that you're going to get to your website, you're going to convert more of them. So it will be a good deal. You'll have a presence that is actually very, primed for conversion and is very professional, all of those things. But we fully realize that you might want to say, actually, I need, as you said, I need a promotional video build. I need SEO help. I need to do some advertisement. And because of it, we also built a marketplace that you can go into, and you can buy credits to use across all of these services. So you can say, okay, I'm buying 50 credits, and I'm going to use 30 of it for doing some ad campaigns, and 20 of them for you to create a logo for me. And next month I'm going to do this and that. And you decide. You're in the driver's seat, and even those are built to be affordable and high quality for the small business customers that we have. Or you might say, no, I don't want to do any of that. I want to do it external, or whatever. But because as part of the ecosystem, we have cost efficiencies that you can benefit from, and as the managed marketplace, so we know the service providers there, they're employed by us. So we make sure that our customers get the best value for it.
Right. Which I think is brilliant.
I think so too.
And we talked about, so I'm just going to real quickly, I want to go over, I have the corporate deck up, but I never go by the corporate deck. It's just not in me. But I do want to go take a look at your chart here and just kind of walk through that. And look, this is a small micro cap name, and the reality is that all of those stocks have gotten hammered, and it has nothing to do with what's happening at the company. It's a function of the market, right? So we still have fears out there about whether or not we're going to go into a recession, and who knows. But as anybody can see, and it doesn't take a technical genius to figure this out. You don't have to be a professional chart reader, but since you guys, Ali, did you IPO or did you do a reverse merger? What did you do?
Reverse merger? Reverse takeover, RTO.
Okay.
Yeah, similar to SPACs.
All right. So since you took over, the stock was up at around $1.30, and now you're down, sitting at right around 46 cents. And what's interesting about where you are right now is that Oops, wrong one. Although that is cool looking. What's interesting about right now is, come on, delete that bad boy. And here we go. You're at an area of support. So the lowest you've ever been has been, I want to say maybe 46 cents, right? That's pretty close to where the lowest you've been.
Yep.
And you seem to be hitting that area and finding support there. So the more it hits that area and holds, then that does kind of define it as the low, right? So now you're kind of just bouncing in between, let's say 63 cents and 46 cents. So, I think, and this is actually kind of healthy action because it's just building a base. And actually, the bigger the base, the higher the move up, or if it were to break lower, the lower the move down would be.
Right.
But, you and I talked about this the last time we met. What do you see is the best opportunity for you, as you've done 5 acquisitions already? What do you think is the best use of your capital moving forward?
Tim, a few things. I think one of the things that's quite interesting about that chart is that we went public about 2 years ago, and I'm going to mention the prices in Canadian dollars. We listed at 75 cents Canadian, and it went up to more than $2, as you can see in that chart. And then we were hit with the same trends of the past while. And now it's around the same 75 cents, basically at the same price that we went public, which is actually rare these days. Right now, you see a lot of stocks that are like 1/10 of the price that they listed. But what's interesting is that in the 2 years, despite the graph looking like that, we've grown from 1,700 customers to more than 4,000 customers, more than 2.5 times, from $7.9 million revenue to more than $22 million revenue run rate, and made 5 acquisitions. And so a lot of these things, the company is, the product suite is a lot more complete, a lot more competitive than it was 2 years ago. So this is the best shape the company has been in, and also operating profitably. So I think the stock price will do what it does, but it's not always, in my assessment, always rational. And I think the smart investor would say, what is a company that I believe in, that I want to be part of, and maybe I take advantage of the price being out of whack. Right now, we're trading at 1.6 time multiple of next year's revenue, which is ridiculously low, right? Even compared to some of the comparables we see, 4 or 5 times would be more of what you would expect. So the downside right now is quite limited, and the upside is, I think, quite high. Now, going back to the opportunities in the coming year, I think a number of things. One is that there are still M&A opportunities that are coming to us that we never would have imagined a year ago, even. That, some of them are, they're good companies, but they want to move on to other things. And, they're saying, oh, we're willing to sell the same company, and it looks good, for 1/5 of the price that we listed it a year ago. And those kind of opportunities you didn't see before. So a lot of those would be things that you can take advantage of if you're smart about it. And the other part of it also is that I think the market at some point will, come back up. And when that happens, the companies that are solid, that they've demonstrated that they continue to grow and, and did well through this period and are profitable, are going to be the first beneficiaries of that. And I think Wishpond is definitely one of those companies.
See, so there's a whole bunch you threw in there.
Yes, I did. Sorry about that.
There's a whole bunch you threw in there, but it's really important, I think, that people recognize. First of all, you're absolutely right that being in the position that you're in, and that goes back to the letter at the beginning of the year, that there are a lot of companies there that are not in that position. They are good companies. Unfortunately, maybe they were a little too focused on growth, got a little
Right.
ahead of their balance sheet, and now they're in a position where they need to raise capital. And if
Mhm.
you need to raise capital in this market, you're going to get screwed.
Yeah.
That's the easiest way for me to explain it. It's not going to be a friendly raise. You're going to dilute the shit out of the shareholders, and nobody's going to be happy about it. So
Mhm.
you have an opportunity or an obligation maybe to take a look at the landscape and say, gee, maybe if we merge with somebody or partner with somebody, then we don't dilute the shit out of the shareholders, and it's a win-win for everybody, right? We become stronger by joining another strong company.
Right.
That is the one option. And I think you and I talked about the fact that when you see you trading at 1.6, you sit there and say, gee, that looks like a pretty good opportunity to buy as well,
Yeah. 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 Yeah.
right? So potentially you could do a share buyback. And I told you those things really don't matter to me because
Mhm.
it's an announced thing. I get it. And what's more meaningful to me is insiders themselves stepping up in the open market, right?
Mhm.
Because at the end of the day, you can announce the share buyback. Does it have to happen? No. I mean, there's a list of conditions that say, if we get the if we get the price we're looking for, market conditions, so forth and so
Yeah.
on,
Yeah.
right?
Yeah.
But throw on top of that insiders that are actually out in the market, open buying shares in the open market, that to me indicates that there is conviction behind the leadership, right? And they see it
Oh. Yeah.
as a value, right? And there's only one reason why people buy. There's only one, and that's because
Right.
they think it's inexpensive, right? So there are a couple of opportunities that you have. It is difficult. Let's see, what do you trade on average? Now I'm looking at the US. You probably trade more shares on the Canadian than you do.
Yeah. Well, and the two of them are somewhat connected, but the volume doesn't get reflected in the US one. But if someone wants to trade, it will, it will kind of basically, in effect, be connected to the Canadian exchange.
Let me ask
There's
you a
more
question.
possibility there. Yeah.
Is there a hope or a plan to eventually uplist to a senior exchange?
Yeah, for sure, for sure. So we, at some point we would want to list in Nasdaq for sure because the U.S. market understands our space a lot better than the Canadian investor base. That's just the reality of it. There are more tech companies in our space that are well known, and investors are educated as a result of that. And you get higher multiples as well. So right now we're focused on growing the business, and but at some point that will be what we will for sure do.
Which will create more liquidity in the stock as well.
Yeah,
Right.
more liquidity and higher price.
Right.
Yeah.
Okay. Um, I guess the way I view it is this, and look, penny stocks is always a tough place to be because everybody, penny stocks, they're pennies for a reason. They're all garbage companies. Well, that's not true. I mean, there's a bunch of good companies that are around today that are much higher, but they all started off as little companies.
Mhm.
Nobody came out as a mega company right out of the chute, right? I mean, so I guess is there more risk? Yeah. Is it a tighter market? Is liquidity challenging? You can build up a position as much as you want. When you go to sell it, it can be really challenging, right? If there's no liquidity. But as I look at this company, I have to ask myself, what's the risk reward, right? And I mean, you could lose 46 cents, right? I think going back up and touching $1.30, I don't think that's a big stretch, right?
No.
I think you've got, whether the market does whatever it does, it goes into a recession, I think that actually could be good for you guys, right? And how many businesses are there just in the United States alone, small businesses?
I mean, millions. Just Shopify alone serves 2.5 million businesses, and that's just e-commerce.
And I think the last time I looked, there's
Yeah,
somewhere around just over 10 million
yeah,
small,
something like that.
right?
And that's just US, right? We're talking about
Yeah,
international.
just US. And how many customers do you have?
We have more than 4,000. So we're scratching the surface, really.
That's a big bucket, right?
Yeah,
That's
yeah.
a big bucket. And if you guys are executing and the customer experience is good for the minimal expense to get started with you guys, I mean, what's your growth rate right now?
Well, organic is 30 to 40%. Last year we grew, well, 2022 numbers are not out yet because Q4 is not done, but probably around 50% mark is going to be what it is because it has some acquisitions. What's interesting is that in terms of our track record, if you look at past 5 years or 7 years, you've seen it in the investor deck. Every year, without a fail, is a growth of at least 30 to 40%. At least some years a lot higher too. Some years close to 90%. So we have delivered, and just as we went from 7.9 million to more than 22 million in 2 years. Now the next milestone that we have set for ourselves is go from the 22 million to 100 million, and we don't see a reason why we wouldn't achieve that in the next short while. If we can do acquisitions faster, if we can't, continue organically growing it.
Do you feel as though you're stronger today than you were 12 months ago?
Oh, for sure. For sure. It's the product suite is a lot stronger. Financials are stronger. Organizationally, we have more muscle power than we had a year ago. Yeah, for sure.
So your team, how comfortable are you with your team?
It's an amazing team. Very down to earth, very pragmatic, very results oriented. And one of the other things that I think in terms of opportunities for the coming year that I'm also very excited about is the use of artificial intelligence. You probably, I mean, you and I talked about this, so your listeners also have probably heard about ChatGPT and OpenAI and all of those things. I know everyone has talked about how significant that is. I cannot emphasize that enough, especially in our space. Imagine you go to Wishpond, and I'm talking about the features that we're thinking about and working on. Imagine you go in and you say, I want to send a newsletter to my subscribers. And you're like, well, I'm not a writer. I don't know what to write. And it asks you a few questions and it generates the content of the newsletter for you, the AI doing that. Or, you're starting to have email correspondence with your customers or sales leads that you have, and that email back and forth to be powered by AI. Or you're creating a web page, you don't know what to put on it, or you don't have a designer, the image, all of that.
That's what I love about you already, right? Because there are people out there that are freaking out about ChatGPT, right?
Mm-hmm.
That it's going to wipe out a bunch of jobs. Well, maybe, but the content that the ChatGPT writes about is going to still need to be created. You're still going to have to create those needs for it to write, right? I mean, that's, and you're already thinking about not that you're afraid of it, but how you implement it.
No, right? We started before ChatGPT. I mean, using OpenAI, we actually did a lot of optimizations behind the scene for ourselves. The lead generation that we do for our own sales team, we did using OpenAI. Actually, we did a lot of automations that saved us about $30,000 a month. So we were already doing that, and now we're thinking, well, how do we bring some of the things that we're benefiting from at the forefront? How do we bring it to our small business customers as well? Also going back to the comment that you made about people being scared of losing their jobs, I think there's definitely some of that. There's no question about it, but it might be a little bit overblown. Just this last Friday, we had the company-wide meeting that we had, and I actually demonstrated the power of ChatGPT to all of our team members. And the purpose was, I said, listen, imagine you have the most knowledgeable person on earth who is also pretty smart as your assistant. How much more productive would you be? Use ChatGPT like that assistant, right? Be more
Right.
productive as a result of that. So, you know, for example, as we were on that call, one of our team members said, well, I want to write an email to one of our customers to let them know price for something for one of the services is increasing. Ask ChatGPT to write that email. Man, it was one sentence that I asked, and the email was pretty good. Like, oh, in our effort to serve you well and improve the quality of service, it's important for us to do this. We understand that this might catch you as a surprise, and this and that. So imagine that person writing that email, how much more productive they all of a sudden became. So those use cases I think are quite important for productivity gain, but also as you create specific use cases in the area of marketing, especially for small businesses who don't have that writer, the copywriter, who don't have that designer, who don't have the sales resources to do the email back and forth, and they're too busy running their show. If you use AI to complement their capabilities, then they can actually do quite well. And the opposite of it is that I can assure you all the large companies in the world are already doing a lot of these things. They already have their team members working on a lot of these automations. So you can decide to be left behind or get with the trends. And what we want to do is we want to constantly be at the forefront of these innovations and help our customers come up to speed. Don't get left behind.
Right. And I think you make a really, really, really valid point, right? You can't just sit stagnant. If you sit stagnant, you're just going to wind up disappearing eventually, right? You have to move it with the times. And I'm one to talk because I don't do anything because I'm too busy talking to guys like you. This is what I do, right? I don't have time to do the other stuff. I mean, this is more important to me. So thankfully, there is a payday from doing this portion. It just takes longer, right? So there's not a more consistent income, but finding these opportunities is important to me, right? And this is a big time to be doing that because the market has been going up for the last 14 years. We needed this cleansing within the market, right? The valuations were ridiculous. And now we're getting overdone to the other side. And if you know where to look and what to look for, there is real significant opportunity. And I do believe that in the next 12 to 24 months, there's going to be a lot of wealth created.
Yeah.
Can I tell you exactly when that's going to happen? No, I can't. But I can tell you that I know what to look for. I know what kind of companies to look for so that when that opportunity comes, and it's vicious when it comes, unless this is the end of the world, and then that instance, then it doesn't matter because it's the end of the world. So who cares, right? But I think we're going to get past this. This too shall pass. And, we will go back onto a trajectory of moving higher. And there will be companies that will disappear. There will be companies that merge to get stronger. And then there will be companies that thrive through
100%. And I think at least for us, the way to think about this year is twofold. One, imagine the worst. Imagine recession actually hurting. Imagine what that means for the capital markets. Imagine what it could mean for demand for our products, and make sure you're still safe in that worst case scenario. So that's one track of thinking. The other track is, well, more than likely that will not be the case. More than likely there will be a lot of opportunities. More than likely a lot of negativity and negative expectations are already priced into the market, and people are super fearful, and you can probably get greedy because of that, and you can find new opportunities that others weren't looking at, and it could be a really amazing year. I mean, also just think about it. Inflation consistently has been coming down. Economy as a whole has not slowed down as much as the Feds wanted to see that, I guess. and interest rate hikes, you can't do much more of them. We're getting to a point that inflation is coming down enough that at some point they have to stop, and at some point they have to start bringing it down. Some of the macro trends in terms of supply chain are already fixed. War in Ukraine is already priced in. A lot of those elements, like, well,
if this doesn't work out for you, man, you might be able to do a thing as an economist. You know what I mean?
No. No, just looking at all of those things, like this year probably will start with pain, but I don't think we'll end with a lot of negativity. I think it might be a good year.
You know what?
I'm hopeful.
I'm right there in the camp with you. You and I have already talked about this. I mean, I think that the small cap, micro cap space has been getting beat up for almost 17 months. So 17 months is a long time. And the cheapest, the small cap, micro cap space is the cheapest valuation it's ever been in history.
Yeah.
Right. And not all of these companies that are in that space are all garbage companies. I'm sorry. There's a lot of companies that are incredibly strong, have brilliant products, and have strengthened over the last 2 years through a pandemic, right? Think about that for a minute. Not many pandemics have happened in my lifetime. As a matter of fact, there's only been one. And to be able to get through that without destroying your cap table and getting stronger. What happens when things normalize? What happens when things do get back to normal, right? And a lot of good things have happened from COVID, supply chain issues. Well, that's why now there's more manufacturing going to be done here in the United States, right? A lot of things are getting addressed. That there's always bad things that come from bad things, but there's always good things that come from bad things too, if you learn from them, right? And I think we are learning from them. So I think the opportunities, I think we might get one more big flush of fear, and fear is a big motivator, but things are getting ridiculously stupid on some names. I mean, the valuations don't make any sense. So, and you're not getting rewarded for executing. At some point you will get rewarded when the street is no longer in fear mode or pumping fear. Then you're going to get this vicious snapback, and that one
everyone will want to compete against each other to be the first to see that trend back.
Correct. And then it's a chasing game. No, you get that big violent snapback and everybody thinks, oh, well, that was just a bounce and it's going to come back and head back down. And then the next thing you know, it just keeps stair stepping higher. Right. And then you're in this position of, do I chase it? Do I chase it? And that sucks. That position sucks. This is the time when you find the companies, you have the conviction, you believe in the leadership, right? This is how you find them. This is when you do it. So, Ali,
I agree.
You are, in my view, one of those companies, right? So
I appreciate you saying that. Thank you.
I think what I want to do is I want to let me put your logo back, and there we go. That is your investor relations email address. You guys have email alerts, right?
We do.
Okay.
Of course, using Wishpond.
So I would say, listen, if you are intrigued by the story, if you don't want to buy the stock today, I'm not telling anybody to buy a stock. That's not what I do. I just present the facts. And I think Ali has demonstrated that he's a pretty sharp guy. I think he has demonstrated that he is a man of his word, that he lays out the vision and the strategy and he executes, right? I think that we've identified the fact that there's going to be a need for this type of business. I don't see it going away. I just see it getting bigger.
Oh, it's a trend of the future. No question.
So these are all very positive things. The stock, the price is in a sideways area. You know where your support is. If it breaks below that level, it could go anywhere. Believe me, it could go anywhere, but it does look to me as though it's trying to find support and it's building a base. So do you see any potential catalysts in the next 6 to 12 months, Ali?
Yeah, I mean, more acquisitions, smaller, just because we would want to, if we do acquisitions, it would be with our own cash flow. That could be one. There are more product announcements. There's some larger partnerships that we might announce. Our, quarterly financial releases generally, knock on wood, have been positive. We intend to continue that. So yeah, there's always a lot of good things that are being released.
And let's reflect back. You did say not too long ago that there are companies that are a fifth of the price,
right?
That you can't even believe the opportunity exists right now.
That's right. That's right.
So I mean, and that is a very beautiful place to be in, right? That is a very beautiful place to be in, because when things are rocking and everybody thinks that their company is worth a multiple of, some crazy multiple of some crazy number, this is when reality hits home, and all of a sudden it's like, well, maybe we're not that, right?
Mm-hmm.
So there is tremendous opportunity out there. This is what I want to do, Ali. And I'm just going to say this, publicly. I'm probably going to be, doing something with you guys. I'm going to let everybody know if it works or not, just so you know.
Sounds good to me.
Sure. But I would love to have you back if there's something significant that you feel we should talk about in the next, however many weeks or months, right? But
Absolutely.
Definitely have you back for a follow-up. Okay.
I would love to.
All right, hold on one second. Unless you think I've missed anything, there's anything you want to highlight, this is your time.
Well, I mean, just as a summary of it, I would say it's a huge market, millions of small businesses. We have a profitable way of acquiring customers and onboarding them. We have an all-in-one solution for them that works. We are profitable. We have 30 to 40% organic growth, and a lot of growth ahead of us in terms of organic as well as M&A opportunities as well. And we're quite undervalued right now. So it's a good story.
I agree with you. That's why you're here. All right, Ali, hold on one second. I'm gonna stop this. Thanks again for coming in, and we will definitely have you back.
Thank you. I appreciate it, Tim.
Okay, man. Hey there, thanks for listening to today's interview with Ali Tajskandar from Wishpond Technologies, LTD. Ticker symbol WPNDF. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? And while you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.